Hi, my name is Ayokunle Olubunmi, President CFA Society Nigeria. Join me and a host of other financial industry practitioners every Monday at 4:30 p.m. right here on Inspiration 92.3 FM for Money Talks with CFA Society Nigeria.
Money Talks, airing on this station every Monday at 4:30 p.m. Money Talks with CFA Society Nigeria. Let's talk about money.
We are professionals. We are impact driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holders' commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyn.org for more details. CFA Society Nigeria, making finance a force for good.
Money Talks.
Money Talks.
Money Talks. Money Talks. Money Talks with CFA Society Nigeria. Let's talk about money. Hello everyone and welcome to Money Talks. Money Talks is a financial literacy program and is brought to you by CFA Society Nigeria. Smart Uzechi is my name. You can call me Captain Smart and you will be financially correct. Today on the show, my guest is Ayokunle Olubunmi, CFA. Ayokunle is currently the head Financial Institutions Ratings and Overseas Research Activities at Agusto & Co., the Pan-African Credit Rating Agency, Green Bond Verifier, and business information provider with offices in Nigeria, Ghana, Kenya, and Rwanda. Prior to joining Agusto & Co., he worked at the United Bank for Africa PLC, where he functioned as a relationship manager in retail banking, financial institutions, small businesses, and local corporate departments. Ayokunle is a senior faculty member at Agusto Consulting, where he facilitates credit, finance, economics, and fixed income trainings. He also facilitates at New Frontiers Learning Center, where he teaches economics and financial reporting and analysis. Ayokunle holds a Bachelor of Science degree in politics, philosophy, and economics PPE from the Obafemi Awolowo University, Ile-Ife. He's a CFA charter holder and member and volunteer of CFA Society Nigeria. He is also a certified member of the Association of Chartered Certified Accountants, ACCA, United Kingdom. As our custom is, ladies and gentlemen, let's make welcome our very special guests on the show this evening, Ayokunle Olubunmi, and this is for him. Ayo, I hope I can call you that.
Yeah, sure, definitely.
Good to have you on the show one more time. We appreciate you.
Thank you very much. Same here. It's pleasure is all mine.
How are you doing?
I'm fine. And you?
I can see that you're fine. I'm fine too. You're looking good, and I like your CFA Society Nigeria shirt.
Thank you very much.
You're welcome to the program.
Thank you.
Ayokunle and I will be talking about protecting financial investment. So one thing is to make financial investment or have financial investment, is yet another ball game altogether to protect those investments that you have. And that is what we're going to be talking about on the show this evening. You can join the conversation anytime by calling us on the telephone number 0700 923 923 923. That's 0700 923 923 923. You can also call us using the WhatsApp portal 0817 313 6193. That's 0817 313 6193. You can send us a WhatsApp message or just record a voice note and send to us. But please do keep your messages short and simple and straight to the point, because we would like to accommodate as many persons as possible. You can also check out CFA Society Nigeria via the website www.cfasocietyng.org, or across social media platforms on Twitter, that's formerly as on Twitter, that's X now. You can also go to LinkedIn, Facebook, Instagram, and YouTube at CFA Society NG and get more information about CFA Society Nigeria and how you can be a part of that financial community. Back here in the studio, we'll have Ayokunle Olubunmi, and we're going to discuss protecting financial investment. Ayo, let's start this evening by asking you to actually tell us what financial investments are and how, for instance, do they differ from other types of investment, because I know when we talk about investment, it's not just peculiar to finance. So talk to us about that.
Okay. Thank you very much, Captain Smart. When we're talking about financial investments are basically acquisitions of financial assets, right? Or let me call them non-physical assets that you can't touch, you can't feel, you can't see them, right? Those assets, the such that the value are derived from the value are derived from contractual obligations, right? Which are basically contracts that guide what you are getting and what you are going to get from that particular investment. And most of the time, you either acquire it by either committing funds or by promise that you are going to commit funds. And the return you are going to get is based on the contract that underline that particular asset. Now, to the second part of your question, you're asking that how does it differ from other type of assets? The first one I think I've mentioned is that it's not physical. You can't see them. Example of financial asset is like your bank deposits, right? Your bonds, your shares. You can't see them physically, although you can have an instrument that represents it. And the second thing also is that for those assets, right, it's those is the underlying contract that determines what you are going to get. Either is going to be something that the returns that you're going to be getting is going to be periodical, like what we call fixed income instruments, or the one in which is based on the profit sharing that will get a particular return on that particular asset.
Very well said. So let's take it a notch higher. Just like what we're talking about this evening, protecting financial investment. So tell us, Ayo, what does it really mean to protect your financial investment? Are you going to hire security men, armed security, or you're going to hire vigilante to say, hey, these are my investments, protect them for me? When you say protecting them, what exactly do you mean?
Okay, now, most of the time when you are making a decision to invest in a financial asset, oftentimes, right, what we call a rational investor, the intention and the plan is that you're going to get higher return. You're going to get return from that particular investment. So when we're talking about protecting that particular asset, it has to do with you ensuring that your planned return, you are able to get as much as possible of your planned return, right? And like you always notice that it entails you first in getting back the funds that you've committed, and also the return that you are planning that you're going to get from that particular asset. You are getting it.
So that's what it means to protect it.
Exactly.
So what types of risks, threaten financial investment, and how can investors mitigate them? Because if you're going to protect it, it means that there are forces coming up against that investment. So talk to us about that and how we can just go around them.
Okay, there are lots of risks associated with financial investments. However, I will focus on three, right, because of time. I think the first one has to do what we call credit risk. Remember, like I said earlier, there is like a contractual agreement that is saying what you are going to get from a particular investment, the financial investment that you have. Now, let's give an example of, let's say, okay, now what's credit risk? It's simply the risk that the other party that you've given the funds to will not live to the terms of the agreement, that they will not fulfill their obligation based on that particular agreement. And this kind of risk is more prominent in what we call fixed income instruments. And fixed income instruments are instruments in which there is already a committed amount, a committed return that you are going to get all through the life of that particular investment. That's credit risk. The second one has to do with market risk. And market risk is the risk that changes in prices and rates will affect your return from that particular instrument. For example, let's assume that you invest in what we call a bond, which is simply you've given money to somebody, the person will do money for business with it, and you already agree a return. Let's assume that you agree that the person will give you 10% annually for the next 5 years, and you wake up tomorrow morning and you realize that the rates in the market is already 12%. You've already lost some money, right? So that one is an example of market risk. Or, for example, assuming you want to buy shares, you bought the shares 100 naira, and 2 days later, the shares are trading at 2 naira. You've lost money. So that's an example of market risk. And then the third one is what we call liquidity risk. Because at times you might have made a financial commitment, you've invested in a financial asset, and initially you might be planning that you want to hold it for a long while. But at times, just like you might have need for those funds and you want to convert it to cash. And what we call liquidity risk is the risk that you not be able to convert that financial instrument to cash without losing a substantial amount of the value of that particular asset. That's liquidity risk. So, for example, assuming you invest in an instrument that is not traded on a financial market, right? A financial market like a stock exchange, right, or like an FMDQ where you actually trade instruments. If it's not traded there, it's going to be difficult for you to easily convert it to cash, right? So that one is an example of liquidity risk. Now, to the second part of your question, which is asking that what can we do to protect ourselves? I always say that to actually ensure that you protect yourself against this risk, it starts before you even make that commitment for that particular investment. And before you make any commitment, you need to do your research. Particularly for credit risk, ensure that you do your research. You understand the kind of instrument, you understand the risk that is associated with it, you understand the risk profile, right? That one will also help you. That will protect you a lot before you invest in it. And I will also advise that you talk to professionals. Currently, there are hundreds of financial advisors that are actually registered by the Securities and Exchange Commission that you can talk to on those instruments that can even help you to protect yourself. And at times, a professional will also help you to understand your risk profile, because it's your risk profile that will help you know the amount of liquidity risk that you can actually even take. For instance, somebody that is 30-year-old and is investing for a long horizon until retirement in 60, the person can afford to invest in an illiquid security that you can't easily convert to cash. But somebody that is already 65, that is already retiring, you agree with me that the person needs to commit his funds to funds that he can easily convert to cash. So all these will actually even help the investor.
Thank you very much. I'm actually happy, Ayo, that you mentioned return on investment. It's a very big focus for so many people who are making investment. But we reckon also that return of investment is equally as important, if not more important. Can you tell us, why is protecting investment just as important as growing it? Because a lot of people, if I'm going to make an investment, my eyes are just fixated on what's the return? Exactly. How much am I getting in the end? Exactly. What's the interest? Or how much am I getting? So just talk to us about that, because so many people follow that, and in the end, we'll get our fingers burnt.
I think as potential investors or investors, something that we need to have at the back of our mind is that 2% of something is better than 100% of zero. So if you are investing 100 million now, let's even say 1 million, if I'm going to give you 2% return and you are sure of it, it's easier than you saying that, look, I'm going to give you 100% return and you don't even get anything. So the first outset is that, look, you need to find out that, look, what is the risk that I will not even get my funds back? And also, it doesn't mean that, I agree with you that return of capital or return of your fund is actually very important. And that's why at times, before you make any investment, it's very important for you to even determine what we call your risk profile. Your risk profile will help you to determine the amount of risk that you can even accommodate. Because don't forget, in finance, the higher the risk, the higher the potential return. So meaning that if you have the potential to take on more risk and you are investing in assets that has lower risk, you actually even your portfolio will be underperforming. You are not optimizing your capital. But at the same time, you need to be careful, right? Like I always say, also say in finance, if it looks too good, it is always too good to be true.
Ayokunle Olubunmi, CFA, is the guest on the program this evening, and we're talking here protecting financial investment. Our phone lines are open now. You can call us on the telephone 0700 923 923 923. That's 0700 923 923 923. Send us a message on WhatsApp, or you can call the WhatsApp number 0817 313 6193. That's 0817 313 6193. If you have any question about investment, particularly how to protect your financial investment, you're welcome now to ask, because Ayo is the master, and I'm sure he's going to provide quality answers to help you to do that. Ayo, while the calls are coming in, I'd like to ask you, how can investors avoid falling for investment scams or fraudulent schemes? We have them, there's a proliferation of all of these things. People are everywhere you turn. There's one investment house or the other calling you with some juicy, returns like that. And sometimes people go there because everybody's looking for more money.
I agree with you. Please, at the back of your mind, like I mentioned it, that I'm going to repeat it again. If it looks too good, it is actually too good to be true.
Oh,
just have that at the back of your mind. And let's forget the next thing that you also need to do is that I mentioned also research. Ask around. Yorubas always say that if you ask for the road, you won't miss your way. Always do your own research and be very sure of that particular instrument, because don't forget, it's your earned money. And during period.
Okay, let's talk to this caller. Hello, good evening.
Hello, good evening.
Thank you so much for calling.
Okay, good evening. Thank you. My name is Neka, and I just want to ask our guest speaker one question, and that speaks to for someone who's a starter, especially for a young star or like a Gen Z who just got into the workspace and is earning a certain amount of income and needs to build up his or her investment portfolio, if I must use that word. So what I'm trying to say here is I'm trying to raise some funds in such a way that I when the rainy day comes, I should be able to fall back on those funds. What kind of securities what kind of securities do you think such an individual can invest in that can yield them funds as they desire?
Okay.
All right. Thank you very much.
Thank you, Neka. She's still in line, or she's dropped?
No, I'm sure she'll be listening. Yeah.
Okay. Because Neka, I will have asked you that: are you saving for an immediate need? For instance, are you saving towards your house rent, or you just want to build your portfolio as you are moving into retirement? You want some things to actually even fall back on. The first thing I will advise you to do, which a lot of us don't like to do in this side of the world, is that look, there are a lot of investment advisors around. If you are not sure of one, go to the website of the Securities and Exchange Commission. They're actually listed there. When you go to approach any one of them, sit down with them, tell them what you want to achieve. They will ask you one or two questions. They will help you to even determine the appropriate instruments for you. Having said that, assuming you are planning probably saving towards your rent or just saving towards something, an immediate need, I think the easiest one for you will actually be a mutual fund. Because the mutual fund, of course, you also need to be careful. Ensure that the mutual fund is registered by the Securities and Exchange Commission. The beauty of the mutual fund is that, look, it's very liquid, right? And there are different types of mutual funds. There are some that invest in various money market instruments, bonds, right? There are some that invest in equities. But the only downside is that the return is relatively smaller compared to equities or what have you. But at least you're sure that your funds is actually even safe. However, if you are thinking that you want to invest up to we have a long time investor horizon. For instance, you want to save for the next 10, 20, 15 years, mutual fund won't actually even be your best bet. The best thing is to sit down with actually an investment advisor.
So you can go to those pitfalls now, investment scams, people, everywhere you look, there's one. And sometimes they're so embellished. They have fine offices, they are driving big cars, stuff like that. Hello, good evening to you.
Hello, Captain Smart, good evening. Good evening, Ayo.
Good evening.
This is James Urona from Oshodi. Okay, so I don't know, each time things like this come up, my own interest has always been the shareholders, or how will I put it now, those who invest. some sort of insurance for them. I like what you talked about on return on investment. I know I did a kind of conversion to dollar, and then it has fallen down drastically. But I still keep getting small interest, which is still better than none, even though I've lost some amount. But my focus I want to ask is, I don't know forms of insurance for those who deal in probably shares or bonds, because it seems as if it's the company that gains more. Whenever there is market devaluation or something, or things go down, we the investors will lose. The company is down gain. So is there no insurance for people who invest in different things like bonds and the rest of them like that?
Okay, thank you very much. You listen up for the answer, and I think there's a question here that's coming on the phone. Okay, 0700 923 923 923, the number to call. You can also call the WhatsApp number 0817 313 6193. You can send us a WhatsApp message, or you can send us a voice note there. So I quickly, because time is really creeping up on us now.
Yeah. Okay, thank you very much, my friend from Mushodi. Regarding the insurance, you're talking about the downside risk, the risk that you won't actually lose a lot of money. Now, there are some investments that actually have that. For instance, if you invest in a bank placement or term deposits that we also referred, all of us talk to, whatever happened to that banks, we have what we call the NDIC coverage, in which you can get up to 5 million of the funds that you've actually invested in it. Now, also remember, there are instruments with different risk profile. For equities, the way equity is, the upside is unlimited, meaning that the return, you can get 1 billion percentage increase, right? Returns. There are some people that invest in stocks, only say investing 5 naira, and some years down the line, the thing is worth 500,000, right? However, you can invest 500,000 and come off with zero. There was a friend I was joking with, like one of his colleagues. The person invested $1 million in the stock market, and at the end of the year, the person ended up with 30 naira. It's in real life. So
you can't insure that.
Yes, you can't insure that one. But something like bonds, the way bonds is actually structured, bonds is a commitment. The person that you are investing in that particular instrument, whether they like it or yes, they must actually repay those funds. And if they don't repay, it's a ground for you to even approach the court and liquidate that particular company, and also ensure that that bond is listed, is trading, and even approved by the Security and Exchange Commission. And even now, luckily for us in Nigeria, we have almost minimal, I can even say almost zero default rates in terms of the listed bonds that we have over the years in Nigeria.
Absolutely. So one more thing to look out for to identify these scam investment schemes.
Yes, please. The first thing is that, number one, ensure that the investment house is registered with the Securities and Exchange Commission. If possible, ensure that that particular instrument, that particular investment is also approved by the Securities and Exchange Commission. And also ask questions, right? Ask those that know, right? Because a lot of us in Nigeria, we don't like paying professionals for paying professional advice. But at the same time, they always say that if you think knowledge is expensive, try ignorance. Right?
They say these professional advice are waiting being work safe, waiting they do.
It's when you lose your money that you do their work.
All right, we have a lot of diaspora listeners, right? You know, some persons would like to send money home and say, help me invest here, help me invest there. So talk us through, Ayo, the simple steps that everyday investors can actually take right now to be able to protect their wealth, whether they're there or they're not.
Please, again, we know the beauty of the Securities and Exchange Commission is actually to protect the everyday investor. And what they've done is that they scrutinize some of these firms that are approved by them and ensure they are doing the right thing. There are even some that they do such that, although this is the company that is managing your fund does not sit with them. It's what we call the trustees. Such that if something happens to that particular company, your fund is actually even safe. So what I would say is that, look, if you are going to invest in any instrument, ensure that it is either the company is registered with the Securities and Exchange Commission, and also the instrument is also approved by the Securities and Exchange Commission. And also, please, most of the time they give us transaction documents. You know, we Africans, we don't like to read.
But they're always in tiny print.
If you then you should get glasses.
Why do they put them in tiny print?
Know that at times
they don't want us to read those things.
If they don't want you to read it, it's you that remember that this is your head-end money we are talking about. So get magnifying glass to read this through and even understand the risk profile.
It is only when there is a problem they say, didn't you see this They would show you the tiny print. Okay, we'll have more calls coming in here and messages as well. Hello, good evening.
Hello, good evening.
Thank you so much for calling. Your name and where you're calling from?
My name is Choma. I'm calling from Lekki.
All right.
Okay, thank you, Mr. Ayo. I was just wondering how we're going to keep an eye on this investment, but I guess you answered it, so that we should ask the experts. So now, who are the experts? Is it the stockbrokers, or do we go to Nigerian Stock Exchange to find out, or what? Who exactly do we ask, to have questions to ask about this investment and how authentic they are?
Okay.
All right.
Thank you.
All right. Thank you so much.
Okay, thank you, Choma. So again, I will reiterate, without marketing any brand, just go to the website of the Securities and Exchange Commission. Check for the list of the approved investment houses in Nigeria. So once you see them, right, you can now approach the one that is closest to you, on the one that you think you have close affinity to, right? Because if it's regulated by the Securities and Exchange Commission, it gives you some level of comfort. And how you monitor it. Thank you for mentioning that one, Choma. But please let's also remember, for we ordinary Nigerians, most of us, after committing the funds, we just forget about it. And then we now wake up 20 years later. I gave my own investors out. No. Most of the time, they send you monthly reports. If they don't send for it, ask for it. So you can easily know when things are not even going your way. Right? When you see that this particular investment is losing value, you can actually even make the right decision. Do I want to get out of it? And if it's actually getting more profitable, do I want to commit more funds to it? Scrutinize it. Because they're managing your funds for you and they're collecting a fee for it. Ask questions, some things that you don't understand. Ask questions.
Absolutely. And Ndidi says here, good evening, Captain Smart and Ayo. Is having a savings account an investment plan? If yes, under what conditions will you not get your return on investment, that is interest?
Okay, for savings account, right? Depending on the amount you are talking about, because you know that the returns on your savings account is less than 10%. And even now we have inflation of how many? Almost 20-something percent, 24% inflation. So you could see that you're actually losing money in real sense. But having said that, the return on the savings account, which is 30% of the MPR, that's the interest rate on the savings account. If you transact on it more than 3 times in a month, you will forfeit that particular interest. But what I keep on saying is that, look, once you don't need those funds, don't keep it in your savings account. At least move it to a mutual fund. The returns are always higher. And there are a lot of mutual funds. Just go to the website of this. Now, I keep on saying that is the reciprocity when you want to get anything. Because the aim of the SEC, right, is to protect you and I, ordinary investors that are not sophisticated, that you are not even exposed to all these sophisticated instruments like swap and all these derivative instruments. Right? You get it there.
Absolutely. The last question, Ayo. We'll just wrap up with this one. People want to invest. Talk to us about when you have identified these investment opportunities. What steps can I take before committing my hard-earned money, to any investment opportunity?
Cool. Thank you very much, Captain Smart. I think the first thing is that you must understand that instrument. See, if anybody is selling something to you and they can't explain to you, please just take a walk. Number one, they need to explain to you like a 5-year-old. They must calm down. If you're asking questions and the person is getting angry, please, that's already a red flag. Just walk away. Let the person be able to explain that one to you. Then also look at the persons and citizens. Have they done something like that before? Right? Is it a particular area in which they are actually very vast in? And don't forget again,